Welcome back. The FMCG pack in general is doing extremely well right now. We have Asian Paints, which has moved to the high point of trade. Crude element coming in out there. Britannia ahead of numbers at the high point of trade. And we are seeing some gains in all the other names as well. The only one that is conspicuous by its absence is Dabur. Underperformed after its numbers came yesterday, and after that as well, currently sitting with a cut. This morning we had a couple of brokerage downgrades coming in from ICICI Securities as well as Phillip Capital. The brokerages are citing, the company's lack of growth opportunities from current levels. We have with us Mohit Malhotra, who's the CEO of their India business. Of course, the overall business, that is. Thanks a lot, Mohit, for joining in. Always a pleasure speaking with you. The street was disappointed with the margins that the company posted. It was a little more than what you had earlier anticipated, the decline. But
Mangalam, there's an echo in the voice. I can't hear you guys, yeah.
All right, we'll try and fix that. But, while that is being fixed, just a word on, what the brokerages have said about Dabur this time, primarily because the stock is at the low point of trade. ICICI Securities has cut their earnings estimates by 12% for the next year. They've cut their target price from 650 to around 580 as well. And Phillip Cap says that the company is struggling to find new vectors of growth, and they have downgraded the stock to neutral as well, with a target cut from 625 to 565. I believe the audio has been fixed with Mohit, but just another update on the numbers. Well, the margins declined by about 270 basis points for the entire year. The margins were 18.8%, and in the conference call yesterday, they said that next year the margins would be around 19 to 19.5% band. And this is another thing that the street does not like, mainly because everyone thought that the margins should expand a lot more, given the favorable macros right now.
Mohit's back with us.
Mohit's back with us. Okay, Mohit, on your growth and margins for FY24, just wanted to understand, what targets do you have? Mainly because if you look at your revenue as well on a 4-year CAGR basis, it's been 6%, which is paltry as compared to the industry. So just wanted to understand your target for FY24 on revenue and margins. Why is the expansion limited to just 19.5% as against the 21-22% you do earlier?
Right. First thing on the volume growth. So I think we are not worried at all, Mangalam. I think if you look at the secondary growth, in the last quarter also, we've had around 10% secondary growth, and the case sale growth is 11%. So I expect the volume growth going forward also into mid to high single-digit volume growth. There is a rural recovery happening, and we've already lapped your basis. So volume growth should be mid to high single. On top of it, there is a price increase of around 6%. So we expect a low double to a high single value growth going forward in the next year also. As far as margin is concerned, we are seeing the softening of inflation happening, big time softening. So with the margin expansion, the gross margin expansion will be there on account of inflation softening. A part of the gross margin expansion will be put into media, which we have cut by around 17% in the last year on account of inflation being high. So part will get into media and a part will flow to the operating margin. Therefore, the operating margin expansion next year, we are saying, should be in the range of around 50 to 100 basis points.
But Mohit, the street is saying Dil Mange Moh. They want a bigger expansion. Do you think you're being a little conservative with this 50 to 100 basis points that you're talking about?
Our Dil also mange more, but we want then margin more. So it should be sustainable level of growth, and which will only happen by investment in media and recovery of the demand environment, which will not happen until we build demand and put money on investments on TV and digital.
But then demand also, you are not grinding for the moon here, right, Mohit? You are saying that revenue growth will be in low single digits and volume growth will be mid to high single digits. With the kind of investment that you're doing, and I read, I was on the conference call yesterday as well, you've hired senior employees for your health business, you have tall targets for your food and beverage business. When does revenue growth really accelerate, and what's your target here?
No, we are looking at a target of low double-digit value growth next year, which I think is very high. It should be the best of the best in the industry, because if you look at the categories in FMCG, whether it's HPC, OTC category or the food category volume growths are still negative. On those negative volume growths of category, which are showing a little uptrend, if I grow at a mid to high single-digit volume growth, that will lead to my market share gains across the category. So I'll be in a very good position. And that's the case which has happened in last year also.
All right, let's talk about a couple of your verticals then. Food and beverages, I think, is around 15% of sales?
Yeah, it's around 20% of sales in the current year.
Okay, and you're looking at growing that business. Could you tell us what is the rough number, either together or you want to split it up, food and beverages? How much can it contribute, say in FY24 and then scaling up in FY25?
So we expect the contribution to remain the same at around 20%, and the business should be trending at around 10 to 15% growth. We are in a very good space in food and beverages. First, let me talk about beverages. In beverages, we've increased our total addressable market from 1,700 crores to 6,000 crores, gone into the drinks category, and wherein we've got a 200 crore of turnover last year, we want to scale it up to 500 crores. That's one part. And we've gained around 2% market share in the drinks category also. As far as juices and nectars is concerned, there we've inched up 20 basis points market share in the last quarter, and going forward also that growth should continue for us. So I think we will be taking this business up to around 1,700 crores to almost like 5,000 crores as a beverage business. In terms of food organic business, my homemade brand is ending at around 140 crores. Next year it will be around 150 to 160 plus bolt-on of Badshah of around 250. So that will be around 500 crores for us for next year, which will scale it up to 1,000 crores. So we're looking at a 5,000 to a 6,000 crores in the next 4 years for food and beverage business for us.
All right, 5,000, 6,000 crores coming in from the food and beverage business. I just wanted to understand your other core businesses, which Dabur, really stands in terms of right to win in that positioning, which is your health and wellness business. There has been a big surge of all these companies right now during the pandemic, a lot of them being acquired by a lot of other players as well. What is your target here? How do you maintain your moat here? And what is the size that you're looking for this business to grow to?
See, our health and wellness business penetration in the country is almost like 80%, Mangalam. 80% would mean out of total 100 households in India, 80 households will have a Dabur healthcare product today. So that is the kind of salience and the equity that Dabur owns, which is a huge right to win for us. To really put a spurt to this business, what we've done is created another vertical of distribution. It's called Dabur Therapeutics, wherein we've seeded that vertical with 450 people and hired Mr. Philip Hayden to actually head this particular division, who will be promoting the doctor advocacy. Hitherto, we were only going to Ayurvedic practitioners. Now we've extended Ayurvedic practitioners to allopathic practitioners also, to promote Ayurveda as a complementary system of medicine and not an alternative system of medicine. And we're looking at a growth of low double digits, which is around 10% or so for our healthcare business as well.
All right. We would have loved to speak more about all your individual verticals, but Mohit, due to paucity of time, we'll leave it at that right now. We'll take your targets on board. You want your food business to be around 4,000 to 5,000 crores over the next 3 to 4 years. At the same time, looking at low double-digit growth, value growth in this year, with margins improving by 50 to 100 basis points. The street would have liked more, which is why we are seeing a bit of a decline out here, though we will continue this conversation.